Now, this is in continuation to what we have learned earlier. So, here I have taken two bearish candles, and in the first bearish candle and in the second bearish candle, you can see that their length of body are more or less the same. But what difference that happens over here is, so here the opening price is over here and the closing price is over here. And in the second candle also, the opening price and the closing price are at the same point. Howsoever, in the second candle, we see that the price tried to make a low out over here. The price has actually dropped down till this particular point and it has tried to make a low over here. But some sort of a buying pressure came in at this particular point, and this in turn pushed the price on the upside and finally made it close at the place where the earlier candle also closed. So now if you ask me which candle is bearish, the answer is both the candles are bearish. Now how do you differentiate the same? So how we can actually differentiate the same is that in the first case or in the first scenario, after opening over here, the sellers were capable of driving the price continuously down, and the opening price itself was the highest price point made by the candle during this particular interval of time. Also, the closing price and the lowest price during this particular interval of time are also coinciding with each other. Whereas in the second case, even though the opening and high prices are coinciding, which conveys to us, the sellers are having some extra control over the buyers. In this case, after making a low over here during this particular interval, the buyers were capable of coming in and finally driving the prices up and making it close at this particular point. So I just wanted to conclude by saying, even though the price made a low over here, there is some sort of a buying pressure that is actually coming in the markets at this point where the sellers are not capable of taking an extra hand over the buyers. Thereafter, we are going to combine these various combinations. The first one with a long body and ones with long shadows. Let it be the upper shadow or let it be the lower shadow also. Plus the small body candles and the small shadow candles together to convey what the price is actually trying to tell us. So let's start with different candlestick patterns. So let's start with the most common patterns, and the first one is bullish engulfing, which is a combination of one small bearish candle and a bigger bullish candle that engulfs within itself the previous bearish candle. So in simple words, when we speak about a bullish engulfing, so it is a bigger green candle that actually forms, which is longer than the smaller bearish candle. So always we see that the body of the second bullish candle is engulfing within itself the previous bearish candle. Now, the bullish engulfing patterns actually occur either as a continuation pattern or as a reversal pattern. So what it conveys to us is, it is telling us the buyers are taking charge over the sellers, or the buying pressure is actually kind of coming in more than the selling pressure in the markets. Now, I just wanted to also convey to you that the smaller the size of the bearish candle tells us that the buying pressure is actually much higher and the chances of an upside move, the probabilities are also increased. Now, always we check out for these kind of bullish engulfing patterns at significant levels. So they could be at significant support levels or at resistance level that is later on acting as a new support after a breakout. So what we refer to as a continuation pattern. So as mentioned, these kind of bullish engulfing can actually be looked out for cases where it is testing a particular support level where we are looking out for a reversal to take place, or as a continuation pattern. For example, in this case, the stock must have already been in an uptrend earlier. Now one resistance level got broken, then upon retest, some sort of a bullish engulfing out here conveys to us some further upside move could potentially come in. Now let's move forward to bearish engulfing. Now let's study the next pattern that we refer to as the bearish engulfing. So this is actually the exact opposite of a bullish engulfing. In the case of a bearish engulfing, we have a smaller green candle followed by a bigger red candle. Now I just wanted to convey to you, in fact the color of the candles really doesn't matter much. So even if this was a small bearish candle also, I would have still considered it to be a bearish engulfing. So what matters out over here is So if we have first a smaller body candle, followed by that if we have a larger body candle, it tells us the sellers are taking over control. Okay, the second big red candle conveys to us that the sellers are actually being aggressive in the markets and they are taking control over the markets as compared to the buyers. So we once again look out for these kind of bearish engulfing patterns as a part of continuation. That is, if something or some stock was in a downtrend, we check out for bearish engulfing patterns occurring upon a retest. Or we also look out for bearish engulfing patterns as a sign of reversal from a resistance levels. Assume that this bearish engulfing is occurring at a significant resistance level. As in, a particular stock would have been in an uptrend initially, and at a resistance level we see first a bullish candle, followed by that a big bearish candle is getting formed, which engulfs within itself the previous bullish candle, which conveys to me or which conveys to us that the selling pressure has been so huge that it has been capable of taking over the buying pressure that was existing earlier. So this is an example where we are looking out for bearish engulfing at a resistance point where we are checking out for a reversal. Now I just wanted to tell, now we can also look at the same pattern at a support level where we are looking out for a continuation pattern. I'll show you that. Now let's talk about a scenario where a support level has been broken initially. So the price has initially dropped down. So post that maybe the price would have tried to retest towards the previous support, which could probably act as the new resistance. Now let's say that the kind of pattern that we see out over there is something like a bearish engulfing. So this actually gives you more confidence in saying that possibility of a downside move is higher now.